Hello. Welcome to today's video. As you can see by the super excited Luke and the 88% win rate on the screen, this today is our initial balance strategy video. So I'm going to explain this in the most simple terms that I possibly can. It is a really fantastic way of getting a daily bias, a really fantastic way of having high confidence trades on the legacy markets. And it is something that I use like every single day with a lot of success, as you can see by the win rate above. So let's get into it. Let's get my big old ugly face off of the screen and we'll start to cover some of the details. So first of all here, the basic idea of this, the premise of this is that within the New York session on major US indices, there is an 88% probability that one side of the initial balance will hold as the high or the low for the entire session. So the amazing thing about this is that once you get that first hour of trading in, I'll explain a little bit more detail of this, of what the initial balance is, if you don't know what that is, in just a moment. But once that first hour of trading, once that initial balance is in, it gives you a bias for the entire remainder of the session and gives you an extremely high probability. It gives you your own validation for basically any trade that you want to take from that point. So I'll explain this and we'll go over some examples and we'll start to have a look at things. So what you are going to need for this, first of all, is a chart for a major US index, so that this works on the S&P 500, the NASDAQ, the Dow Jones, and the Russell, I think a little bit as well. But me personally, I use it on the S&P and I use it on the NASDAQ. And those are the two that I use to trade. And it is for the New York session on the S&P 500, the NASDAQ, and other major indices. The second thing you're going to need is an understanding of basic TA, because what this will not give you is a guaranteed, like, here's your entry, here's your exit. What it does give you is an invalidation, and it gives you targets and a bias for any trades that you take throughout the entire session. So you need to know where you might want to enter a trade in the first place. So you do need to have an understanding of TA, and you do need to kind of know how to trade a little bit, because you've got to get into a trade somehow. Third thing you're going to need, a TPO indicator, or just the ability to draw two lines on a chart, or something to give you some way that you can mark out your initial balance. And I'll show you that in just a second. And the last thing you're going to need is your economic calendar, because the 88% win rate for this type of trade is dependent on there not being anything to mess it up. And by that, I mean, if you're going to get FOMC coming out during the session, if you've got an example that we actually had yesterday, it was the end of the month yesterday, you have an options expiry that happens at the end of the session, and that creates some craziness. Those type of things you do generally, you don't need to avoid them, but you need to be aware that it's not going to be 88%. Okay, it removes that statistic. However, for a lot of the time, like if you've got FOMC at 7 p.m. UTC and the market's been open since 2:30, you've got a few hours there that you can be trading this before the volatility kicks in, and it's likely to ruin the statistic. So that's why you need the economic calendar there, just to be aware of it. You don't want to be trading this if you've got news coming out like right in the initial balance or right after the initial balance. So a simple set of rules. First of all, the initial balance is the first two 30-minute periods of a session. So on a TPO chart, this will be periods A and B. I'll show you that in just a sec. The B candle gives you your bias. So if you are closing at the end of the initial balance towards the lows, that means you've got a bearish bias. If you're closing near the highs, you've got a bullish bias. If you're closing in the middle, you've got a neutral bias. The C period, the following period, gives you the confirmation. So if what you're looking for, if it's bullish, you're looking for that C period to go and take the highs, and then you're looking to buy dips and target continuation. If it's bearish, if it's closing down towards the bottom of the initial balance, you're looking to sell tips. So any moves up, you're looking to sell them, and then you're targeting the continuation. And something in my eye. And then if it is neutral, so if the initial balance is closing around the middle, you're looking to buy and sell extremes, so like swing fader pattern at the top, or like you take the bottom, and then you're targeting like the midpoint. You're targeting balance, so that can be a point of control, it can be a VWAP, it can be the EQ, the midpoint. The statistic is, like I just said a minute ago, the statistic is not accurate when data is released during the session. For example, FOMC, Fed announcements, options, expiry, etc. So that goes over all of the the important stuff that you need to be aware of straight away. And let's just go to TradingView now and take a look at things. So here we go. Here's your charts, and I'm just going to very simply show you some stuff. So if we make this just clean, okay, so what first thing you're going to need to do, I'm showing you the ES1. So if you're trading legacy markets, I use the CME contracts. So that will be ES1 exclamation mark, or on the NASDAQ, it will be NQ1 exclamation mark. And that is your S&P 500 E-mini futures, or on the NASDAQ, it is your NASDAQ 100 E-mini futures. Okay, so these are the two that I most often trade. Now, a TPO, what you're first going to need to do is go on to regular trading hours, or if you're trading on something that is, this is a little bit squashed, but you can see where, yeah, you can see that, what I'm talking about. So regular trading hours, you go down here and you click on regular trading hours, and that means you're just using the New York session on its own and you're excluding anything else. The next thing that you're going to need is either a TPO. So I just use the stock TPO from TradingView. Okay. So I use the stock TPO here. If I'm trading on the ES, I'm using 4 ticks. If I'm using the NASDAQ, I'm using 10 ticks. And that gives you a nice visual representation of what you're looking for. The TPO, what I'm saying here, is your A period and your B period give you the first two 30-minute candles. So if we switch this to a 30-minute time frame, you can see the initial balance, once this loads up, are these first two candles of the day. And what this gives you on a TPO is it gives you this white bar at the side here that tells you what your initial balance is. The other way that you can do this, if you don't want to use a TPO to fill up your screen, either there's another good indicator called Market Sessions by Leviathan. And you can set this just to give you your IB. So I obviously have different sessions placed into this where you've got your New York session, which is what we're looking at. So if you are going to try and trade this on something where you don't have the option for electronic or regular trading hours, what you can do is just use a session splitter like this, and then you can see the session that you're going to be trading on. But for myself, I just tend to do it this way. And then, like I say, your initial balance is those first two candles here. Again, if you don't want to be using any indicators, or if you're using something else, very simple. All right, you're looking for your first two candles. Let's say this one here, for example. You can just draw yourself a little channel, and then you've got your high, your initial balance high, your initial balance low, candle 1, candle 2 on the 30-minute time frame, and then you've got your midpoint. So what we're going to do now is just go over some examples and start to have a look at this. So I'm going to use let's use the NASDAQ. Okay, and let's just put on these market sessions and we'll just toggle on and off the TPO. So example, yesterday. Okay, we had your initial balance. So market opened up at the top. You had a big move down and then you close towards the bottom of this IB. I'm going to just quickly mark the 0.5 level on here to make it easier. There we go. We can see the 0.5 level, and then we can remove the TPO, and you can see the end of this closing within the lower portion of this. So what this does is it gives you a bias for continuation lower. You have that C period, which gives you the confirmation. So you can see here, if we do zoom in, C trades below B, C being the third 30-minute time period. Okay, so C trades below B, and then your bias for the day is that so what happens there is you have an 88% probability for that high, because you had a bearish bias and you're looking to take out the low, there is an 88% chance that that high remains intact for the entire day. Now, on the NASDAQ, we did have options expiry yesterday. So if you look at this on the ES, for example, and we put on our TPO, we can see actually at the end of the day, options expiry, that final 30 minutes of the trading session came and it took out the highs. So you had that initial balance, you were looking for that continuation, lower, lower, lower. You can keep being able to short this, short this, short this, because that is where your bias is. But at the end of the day, options, something to be aware of. You come and then you sweep it and you reverse. So that removes, that then took out the high and then negated that 88% thing. It stayed there on the NASDAQ, but it didn't remain there for the whole session on the ES. So ways in which you can, so this basically being a trending day, okay, you're looking for lower. So you have that move down, you're closing the session in that lower area and you're looking for continuation. So it sets you up basically straight away for a trade here with an invalidation of the highs and you're looking to take out the lows. Now that's not a very good risk to reward on that. However, what you can also do is look for then that remains the high for the day and you're then looking to just continue to take shorts throughout the rest of the session. We'll go back to the day before, okay, where you have another example here of a bearish trending day looking to go short. And then this is what I mean by having some basic understanding of TA. You're closing down towards the lows here. You know that you're very unlikely to come and take out these highs. And then you get an opportunity with price sweeping some highs. And if you're using something else like a VWAP, you can have this as using some confirmation. But price sweeps the highs. When you get that close below, you can look to take a short position and you're aiming for continuation, like the rules say. Okay, so you get that continuation lower. What happens next? You're using some other kind of basic form of TA. Maybe you want to put a Fibonacci retracement on here and you're looking at what happened then. You can then go, okay, look, we've retraced back into here. We know we're bearish. So then you're looking for another move down, which is then what happened on this day. You go into this one where we have a close that is fairly neutral. But towards the top, you come and take out the highs. And then because you've taken out the highs here, you've taken out these highs, which gives you, like I say, an 88% chance that that low does not get taken. So what happens when you get a deep retrace later on in the day is that gives you a decent invalidation because you know you've taken out the highs, you're unlikely to take out the lows. So therefore, when you have these deep retraces, you can go long from that point. We'll go back to another day. Once again here, this was a really nice example. And I'll switch between the ES and the NQ. We'll show you this. This was nice on the ES in particular. So we'll turn that off. We'll turn this one back on. And then you get to see the... Take that off. There we go. The initial balance here, you close very, very neutral. So here's your example of a neutral close. You're right at that midpoint. Okay, so initial balance high, initial balance low, right at that midpoint. And then if you remember what we were saying about for a neutral day is you're looking to sell, buy or sell extremes. So price comes up, it takes out the highs, and then you're looking for retraces from that, taking out the highs, and you're aiming for your midpoints, your points of control, and your VWAPs. So a good thing to be looking at here is, let's say, for example, you've got your VWAP as take profits when price comes and takes out highs. You're looking for that to return back into balance. So use of VWAP, really good for this. Use of a fixed range tool to give you your volume analysis, really useful for this, coming back into that POC. So short into the POC, short into the POC, for example. And once again, that giving you some nice trade setups that you can use here. Similar situation here, okay, so you end up closing the initial balance with actually a neutral to bearish, but what happens there is you have the opportunity to take a short, you sweep the lows, opportunity to fade that, and you know that the likelihood is that because we've taken the lows, that the high is going to remain intact, and then it does for the entire session. So we can take this back as far as we want to go with this, and you'll see that if we are using the TPO, let's go for, again, ES yesterday failed, you had options expire at the end. The day before that, we had a bearish bias, initial balance high remained the extreme for the day. Day before that, bullish bias, initial balance remained as the low for the day. Initial balance is the extreme for the day. Here, initial balance extreme for the day. Here, initial balance both. Neither side of them got taken on this occasion. On this one here, you quickly sweep it at the end, get a reversal. So that's one where it maybe didn't work. This one, initial balance extreme for the day. This one, you just quickly poke outside. Initial balance extreme for the day, 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 and 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 extreme for the day, extreme for the day, another one, and then you go back over to here, and that takes you back to the 30th of October. So yeah, that is your that just gives you an example of just how, like, where you get the 88% from. It is on average like one day every couple of weeks this will fail, unless you've got something like we've had with the options and the news and everything. But it is such a powerful tool that you can use to just go, right, there's your initial balance, this is what we're looking for, and that is then what you base the entire remainder of your trading for the rest of the day on once you have this. So yeah, feel free to ask any questions in the comments below. If you enjoyed this video, please do give it a like. Do go and subscribe as well if you have not done so already. Any more information about our community, go and visit tauruscrypto.com. And yeah, I'm on Twitter. You can join the Discord. You can do all of those things. You can join the crew. And I am always ready and available to answer any questions that you have. But I do hope you enjoyed this video, and I will see you all again in the next one very soon. Cheers. Bye-bye.